direct investment into Nigeria fell by 19% to $250 million in Q1 2025. This is according to the central bank's balance of payments report. The drop reflects weakened investor confidence amid exchange rate volatility and unclear policy direction. Portfolio investments swung from $5.6 billion inflow to a $5 billion outflow, driving a $2.77 billion overall deficit. And despite a $3.73 billion current account surplus buoyed by stronger exports and a widened trade balance, Nigeria's external reserves dropped to $37.82 billion. Meanwhile, diaspora remittance and foreign aid fell sharply. We have joining us now to break down the data, Oladipo Ajayi, Head of Fixed Income and FX, Chapel Hill Denham Securities Ltd. Great to have you in, Mr. Oladipo.
Good morning, John, and thank you very much for having me this morning.
Always a pleasure. Give us a picture of what's happening with foreign direct investments. We know at the peak of it, right? That's when the reforms were, we're in the heat of the reforms. We saw that flight, right? But now some will say the dust is settling, but we're not seeing that reflect with FDI. So what's happening here?
Well, I think it's not, we cannot look at it in isolation from the fact of what is happening globally. And don't forget that in Q1, the United States President actually mentioned that the tariff war will kickstart April. So a lot of foreign investors were actually standing by the sideline at that particular point in time. They need clarity. They need to see the U.S. president unpack what he had in his offering. And this is one of the reasons why we do not see a lot of investment actually flowing into Nigeria or some other emerging market at that particular point in time. And also, don't also forget that Q1 also have its peculiarity, and because a lot of investors were still trying to check what would be more like the direction and what trajectory would the country be actually towing at that particular point in time. So I think that's one of the reasons why we didn't see much more of that level of inflow into our economy in Q1. And I also believe that they will also be looking at some of the fundamental issues like inflation. And in January, we actually mentioned that we're going to rebase our inflation figure and also the GDP. A lot of foreign guys are actually waiting to see how would that pan out, what would be the effects, what would be the modality, what would be the aftermath of some of these rebasing activity. And I'm not actually surprised if most of them actually waited to actually see what will happen by the end of Q1. Because if I've been in their shoe as well, of course, I would decide to actually see what will be the end result before jumping into Nigeria.
I mean, you've mentioned quite a number of indicators that are impacting investor confidence, and we'll get into the individual details and whether or not this is the trend that will continue for the rest of 2025. We'll get into that with you, Oladipo Ajayi. Stay with us after this break. We have, of course, Oladipo Ajayi, who has been with us providing perspective. Thank you for staying with us.
Thank you very much, Joanna.
Right, a pleasure. Before the break, you did mention several indicators that may be driving their confidence. There's a larger geopolitics of it all. And, Q1 wait and see approach. But, we're in Q2. Inflation has been sliding, dipping back to back. What are your thoughts? Do you see a turnaround with FDIs, into Nigeria with some of these indicators shifting? And yes, there's still some level of uncertainty on the geopolitical scale, but we know that money is always looking for where to go. So why isn't Nigeria the destination? And will it become the destination ahead?
Well, I think the foreign portfolio investors are actually like the first mover because if you remember last year, at the beginning of last year, Q1, that was when the central bank started their hawkish approach to the economic change. and they were actually very aggressive at that particular point in time. They were doing a lot of OMO bills, and most of these OMO actually matured in Q1 this year. Most of these foreign portfolio investors tested the plumbing of the FX markets to see whether the central bank has the capacity. A lot of them actually exited the Nigerian markets. They just want to be sure that they can actually exit their funds if they actually want to. And what we saw is that they have that seamless exit of our markets. And since then, we've been seeing a lot of them trooping back to the market. In the month of May, we saw aggressive interest in the market, and also in the month of June. Also, I think this month it's only about one or twice that we have seen the central bank actually intervene in the FM market. We'll see more of foreign guys actually participating in the market actively. So it shows that a lot of them are seeing now clearly that Nigeria looks more like a destination. We're seeing upgrade in our rating by Moody. We're seeing Fitch also upgraded our rating, which also means that Nigeria is a better place than where it used to be. And also it simply means that most of the aggressive reform by the fiscal policy guy and the monetary policy guy, they are actually paying off now.
Yeah, indeed. I mean, that's FDI versus FPI. It seems like they're turning to, FPIs instead. And we'll come into the risks, in that going forward. But even with FPIs, we're seeing quite some volatility, right? Domestic and foreign portfolio investment report from NGX cited in March, we saw it peak, right? That's foreign transactions peak. 699.9 billion. April, we saw it dip sharply by 91%, and May we're seeing a rebound. What do you make of this volatility we're seeing, and what does it, point to about the quality and the mindset of the investors who are coming in and out of our markets?
I think the first thing is that they can actually come in and go out of our markets, and they are currently testing the confidence of our FX markets, and a lot of them are now getting more assured that Nigeria has the capacity to actually meet their FX obligation. And as such, we've been seeing more of them coming to the market. I mentioned earlier on that at the beginning of the year, a lot of them were trying to exit the market. And the motive is not because the yields are not attractive. The motive is not because they felt that the fundamentals are not right. One of the reasons why they are trying to exit the market is that because of what has happened in the market, in terms of them finding it very difficult to actually exit the market in terms of getting FX. But with the current FM market, a lot of foreign investors have been able to actually access the market, and they've been able to actually exit their fund. And most of these same guys that actually exit the market, they are now coming in truth back into the market because there are a lot of opportunity currently in Nigerian market. You have opportunity in the fixed income space. The law of volatility we are seeing in the equity market as well. Most of the consumer names are actually performing very well. The banking names also are actually doing very well. So when you sum all this together, it shows that there's a lot of things available to actually attract most of these guys in the market. What we've seen in the past is testing the confidence of our FX system. And now that they are very much assured, that they can actually come in and also exit the market whenever they want to leave. I think that we'll likely see more of them coming back to the market.
All right. So, I mean, we've passed the test in that regard, and hopefully we see that reflect.
Yeah.
But Nigeria, what we need now, a lot of analysts say, is that direct investment. FPI is people in and out whenever you choose. But we need, it's been said, we need long-term investment. So, I mean, how concerning is this 19% drop in FDIs, that's foreign direct investment, for Nigeria's long-term development goals, particularly in sectors like infrastructure and manufacturing? Isn't it a cause for concern? When are we going to see them come back? We know there was a period of exodus of these, multinationals and, this direct investment, but some will say, it's about time we see them, come back. What are they waiting for?
Well, there's a lot of things that they need to see before they come back. And I think that falls within the purview of the fiscal policy guy and the government. And one of the things that is, I feel, is the policies around the industry. Of course, we've seen the tax reform bill. We feel that one way or the other, that will actually some of these investors back to the market. And aside that, also, we need to see more infrastructural development. Because a lot of these people, they can actually do business as well at a reduced cost. And so what do you have to actually offer them that can actually lure them into Nigeria? If the cost of producing in Nigeria is higher than the cost of producing anywhere, then why do I need to come and set my business up in such an environment? And so I feel that the government also needs to work in this regard, like a lot of reform in the oil and gas, reform across board. Also, these are some of the things that will actually bring some of these FDI back into the market. And like you said, these are the kind of funds that we actually need. Foreign portfolio investors, they are more like hot money. Whenever there's a little crisis, they actually want to exit your market. But when you have foreign direct investment coming into your economy, what it will mean is that it brings a lot of stability in terms of currency because their fund is actually to stay for a long time in your environment. And at the same time, you also bring opportunity in terms of creating employment opportunity for the people. And also at the end of the day, what we'll see is that more like an improved GDP, and also we in turn will actually increase the standard of living of Nigerians. So I think the government on their part needs to actually sit down again and look at this critically. This is not a time that you want to continue to see exodus of FDIs from Nigerian market. This is a time that you want to see a lot of them coming into our economy so as to help develop this economy. Government cannot develop an economy in isolation. And the sole responsibility of the government to actually create an enabling environment. You have to create an environment where that is secure. Nobody wants to come and invest in an economy where there's a lot of insecurity. So you don't want to get to a level where you cannot boldly say that your employee are actually doing very well in that environment. And these are some of the things that the government also needs to work together around to actually see that they actually create an enabling environment for some of these FDI guys so that they are able to actually come into Nigeria.
Right. So obviously we need more committed investment, investor relationship, but that depends on us, as you have highlighted the fiscal side of things. Finally, despite this capital flight, we've seen Nigeria's current account show a surplus. How sustainable is this trade-driven buffer? What are your thoughts?
Well, I think that that's still sustainable because when you look at the composition of current account, it gives room for, because at the end of the day, we are still exporting crude oil, we are still exporting gas, we are still exporting some other things. So if you look at it from that perspective, we will continue to actually operate more like a surplus current account in that regard. And also, don't also forget that Nigeria is actually looking at expanding their daily production in the oil and gas space. Is that if we see significant drop in price of oil in global market, that will actually affect the current account as well. And at the end of the day, that will put pressure on the reserve. As you speak currently, the reserve actually dropped in Q1 by close to about 2.5 billion drop in Q1. And if you continue in that regard, it simply means that we will get to a level where our import copper will drop aggressively. And these are some of the indicators that foreign guys actually consider before actually coming into your environment. So I think the government also cannot just continue to sleep around this to feel that, oh, all is well. Oil price is high currently because of the challenges we are seeing in the Middle East. But we don't want to get to a level where the price will drop aggressively when everything settles down. And we'll now find out that our current account is down in negative, and that would not be very good for us because the impact will be aggressive, will aggressively impact our reserve.
I imagine.
I think that the government needs to actually work on this as well. Diaspora inflow also, we saw a drop in that as well. So the government also needs to actually work around this as well to ensure that there's a lot of incentives that they need to actually put in place.
I mean, so much. So much. There's so much. Sorry to interject, but there's so much that our government needs to do. Hopefully we do see them, get round to that. And again, calls, and that's another conversation for another day, calls for boosting of non-oil exports. But thank you so much for your time, Oladipo Ajayi, Head of Fixed Income and FX, Chapel Hill Denham Securities Limited. Thank you for your time this Monday morning.